coverage A on a homeowner's insurance policy, if you look at it, it'd be coverage A is dwelling. That's your first one. And this is what most people are going to look at. And this is how much coverage you have to rebuild your home in the event of a claim, a total loss scenario, burn down. So that's going to be however much that number is. Something that is important to pay attention to, because that's something that most people are looking at, is how much is coverage A. But there's some key ancillary parts of that coverage. And the first one is it replacement cost or actual cash value? The big difference here between replacement cost and actual cash value is replacement cost, as it infers, is going to be to rebuild the house with a new house. So we're replacing the house. Actual cash value says we're going to give you the depreciated value of the house. It is not intended to rebuild the house. It's intended to pay what the actual value of the house is as it is today. And that's not going to be market value. It's not an agreed value, because you could have agreed value as well. But most of them will be either replacement cost or actual cash value. That ACV, actual cash value, is going to be how old, what is the functional age of the building? So if that building is functionally 30 years old, what is the depreciation schedule on a house? And typically would be depreciated out the functional age of a house is going to be somewhere around 50, 60 years or something along those lines. So the adjuster at the time is going to say, what's the functional age of the house, not what the actual age is. You might notice that if you're looking at an appraisal, they'll put the actual age and then they'll put the functional age or effective age. And so that's what they're going to go off of. What's that actual, functional or effective age of the house? And then they're going to depreciate it out on a schedule. And that schedule is going to be determined. It's a national schedule. It's not something that adjuster is going to make up at the time of the loss. So you're not going to get full value of the house. But if you were going to say, hey, some people can't get replacement costs because maybe the condition of the house is such that the insurance company would not offer replacement costs. Or some people might just say, you know what? I'm at a point in my life, if this house burned down, I would not want to rebuild it. I would just give me the money and I'm going to leave. I don't want to mess with it. So that might make sense for some people, but it's an important distinction to understand. Is it actual cash value or replacement cost? Second part, subset of the replacement cost on the dwelling amount. So let's say the dwelling amount, and I'm just going to use some made up numbers, obviously, because we're not talking about a specific house. The dwelling amount is $200,000. So that's the replacement cost on it. Then you have a sub coverage of extended replacement cost. Or you may not. It could just be straight replacement cost, or it could have extended replacement costs. The most common in the industry is that you would have extended replacement costs at 25%, which means if the building burns down, you get an additional 25%, or in our example of $200,000 house, you're going to get $50,000 extra, kind of as your slush fund. So that's going to help you, like if the price of lumber jumped or the price of labor jumped mid-term of your policy, that's going to kind of be build in that slush, so that way you have more to rebuild in the event of it costing more than what they projected it to cost to rebuild the house. You can go 20. I've seen them as low as 10%. I've seen them as high as 50% or 100%. So it will double the value. There's also an option, and these are usually on high-end homes or high-end carriers. Insurance carriers will give the option of replacement cost guaranteed, which just means effectively that amount, that $200,000, becomes irrelevant, because they'll rebuild the house, whether that costs $200,000, $300,000, $500,000. There's no cap in the amount the insurance company will pay to rebuild the house, like, kind, and quality. So those sub things people don't pay attention to a lot can make a huge difference in the claim payout process if you have a total loss, a major fire. So something to be aware of is how the replacement cost, actual cash value, extended replacement cost, or guaranteed replacement cost.